The first tick on the Nifty is at a record high opening, 20,124. The Nifty Bank, it's been a bit choppy, but right now it's just up close to about 70, 72 odd. The Midcap Index is up nearly 1%. The Small Cap Index has a rally of more than that.
8 points on the Nifty, 20,076 on the rate. Well, 35 points higher is what the Nifty will end with. So there is no kind of big 3 p.m. expiry move in that sense. At least not today.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. The Sensex and the Nifty end at record highs even as gains remain limited. The mid-caps and small caps continue to rebound as they outperform the blue chips for the second day running. Bombay Dyeing fires up on announcing a 5,200 crore land sale. Also, 55 lakh shares of the company change hands in a block deal. This stock surges 15%. Ethanol blending and price revision expectations keep sugar milk stocks perked up even as inventory in the country at 4.5 million tons is the lowest in 5 years. JSW Group stocks are buzzing in trade as JSW Infra gears up for an IPO. Sources say the launch could be by the end of September. Zaggle Prepaid Ocean Services 563 crore IPO opens today. Sami Hotels also hits the street with an IPO worth 1,370 crores. Indigo gains as aviation regulator approves the wet leasing of 11 Airbus planes. NMDC and JSPL rally after positive brokerage outlook. Navneet Education gains after Kedara Capital joins it as an investor in K12 Techno Services. All right, well, those were the top stories. Here's a lineup of what we have in store for you this evening. It's a packed show as always. In Market Opinion, we have Ashwini Agarwal of Demeter Advisors. In Corporate Voices, we have Raj Narayanam of Zaggle Prepaid Ocean Services and Ashish Jakanwala of Sami Hotels. All right, on to the first headline then and on to the day's market action. The market posted what was a record close even as gains remained limited. The Nifty ended above the 20,000 mark for the second day in a row. The rally was led by Reliance, Infosys and metal stocks. The mid-cap index extended Wednesday's gains to outperform the blue chips. Prashant Nair is here with the day's trading action.
Gains continued, nothing very large, small, but admirable because just day before yesterday we had a big shakeout. Yesterday was a solid recovery day for the broader markets, but today we followed through once again in the mid and small cap space. So the Nifty ended 30 points higher, the Nifty Bank not very much, but the mid and the small cap indices up on your screen, and actually throw in the micro cap index as well, the smallest of the lot, they went up between 1 and 1.5%. So action in that space is back, although they still remain below day before yesterday's highest levels from where, of course, that correction had taken place. Now, top sectoral gainers include, sectors like PSU banks, metals and real estate. Anything with the government in it did very well. Now, Nifty gains coming through in stocks like UPL. You had Hindalco, which did well, and there was ONGC, which gained. And there was a bunch of sugar names, right? Long list here, but this is a space which goes up together. Renuka, EID Parry, Triveni, Dwarikesh, Dhampur, Dalmia. There was a brokerage initiation note. And of course, some fundamental factors perhaps also adding up to it. I was talking about the PSU rally here. So it's not just banks, right? So banks did well. IOB, Central Bank, but there was also NMDC, NHPC to give you a flavor of what really stood out. NBCC, another one which did very well. Apart from all of this, Narayana Hrudayalaya, the company was with us in the morning. Bombay Dyeing did very well. Time Technoplast, Transformers and Rectifiers, Birla Cable, Jamna Auto, TRF, the material handling company, had a big day. Ethos, luxury watch retailer, which did very, very well as well. The only issue which is being pointed out, of course, from an India perspective, in terms of global macros, is the price of oil. So I think that's the one thing you need to watch as we come back tomorrow. We are at 92. At some point, the market will sit up and take notice. Otherwise, for the Nifty Bank, the all-time high is very much in sight, is around 1% away. And of course, on the Nifty, targets are about 20,350. Today, we left above 20,100. Back to you.
Okay, all right, Prashant, thanks very much for that. In Market Opinion, Ashwini Agarwal of Demeter Advisors says that valuations in certain sectors are very stretched, but believes that PSU banks still offer a lot of value. Listen in.
2 years ago, we had, all the new age tech-led companies trading at, very, very high multiples, and we know what came to pass. Similarly, we saw that with real estate and infrastructure in 2007, and technology in '99, and so on and so forth. So, the point is that in the short run, nobody knows how high these things can go. But valuations in certain spaces are very, very stretched. The PSU bank pack, which has started finally moving, I think offers a lot of value for the simple reason that the banking sector environment is reasonably benign right now. You're seeing loans growth, you're seeing very low credit costs. There is some compression on spreads, but that's about the only negative. I think there are opportunities, but I think investors have to be mindful as to where the value is and what they are doing and what they're holding.
All right, well, on to the second headline now. Bombay Dyeing rallied around 10% after it announced a 5,200 crore land sale in Worli to Goiso Realty Private Limited. Shares worth 55 lakh changed hands in a block deal as well. Surbhi Sutaria joins in with details.
Thanks so much for that. So, Bombay Dyeing is going to monetize a big land parcel of 22 acres at Worli for 5,200 crores, which is close to like 2 times their current market cap. Now, they're going to sell this land to a subsidiary of Sumitomo Realty. This is going to be done in 2 phases. In phase 1, they will receive 4,700 odd crores, and in phase 2, they'll receive 525 crores. Now, on completion of this deal, they will be able to extinguish all their current borrowings and save on interest costs going forward. Their current debt is 3,642 crores. They will also be able to pay dividends in the future, and they will have a strong treasury balance to fund the future realty projects. The company has also said that the board has approved the development of unutilized land parcels, which has a potential to create 3.5 million square feet of residential or commercial space and a revenue potential of 15,000 crores. Additionally, 2.7% equity worth 92 odd crores change hands via block deals. If you look at the shareholding patterns, the major shareholders which hold more than 1% stake in the company is LIC with 1.39% and Madhuri Kela with 1.65%.
Okay, all right, Surbhi. Thanks very much for that. On to the third top story that we're tracking. Sri Renuka Dwarkesh Sugar, Balrampur Chini, Triveni Engineering and other sugar stocks surged between 4 to 10%. This is on the back of ethanol blending and price revision expectations. Surbhi, coming back to you, are things turning sweeter, no pun intended, for the sugar stocks?
Sugar season has seen a transformation in the last 5 years, with more and more sugar being diverted for ethanol production. Now, currently, there are 2 things working in the favor of the earnings growth of these sugar companies. First, the domestic sugar prices, which are at 37 rupees per kg. Now, with the prevailing El Nino conditions, the sugar production is under pressure, and the sugar inventories are also at 5 million tons, which is the minimal requirement for the peak festive season. Now, because of the favorable demand-supply scenario, prices are expected to remain firm at 37 rupees per kg. Another factor which is aiding the earnings growth has been higher ethanol blending. Now, government has reiterated that India wants to achieve ethanol blending target of 20% by FY26. Currently, ethanol from sugar diversion can suffice 7 to 8 billion litres, and we will need at least 11 billion litres to reach the 20% target. This means that the company will have to do some more capex on the distillery front. Currently, when you look at some of the listed companies, at peak utilization levels, the companies will have capacity of anywhere between 11 to 35 crore litres, with Balrampur Chini being the biggest one with 35 crore litres. They will also contribute 30 to 45% of their revenues by FY25 from the distillery segment, which will aid the valuation. Now, when you look at the valuation of these companies currently, they are all trading under 10 times EV EBITDA with a return on capital employed in the range of 15 to 23%. There are some other things we'll also have to watch out as the next sugar season starts. 1. Any information on the SAP price hike. Industry is working with a number of rupees 15 per quintal. Anything higher than that could be negative for the UP mills. We'll also have to watch out for how much they carve out for the exports the next sugar season. And also, industry is awaiting the ethanol pricing for the next sugar season.
Okay, all right, Surbhi. Thanks very much for that. Busy day for you. We'll take a short break now, but stay tuned. We'll be back with all of the other top stories we're tracking this evening. Welcome back. Well, you're still with us on Markets Today. Let's get to the rest of the headlines that we're tracking for you. On to the fourth story then. JSW Infra is gearing up to go public. Sources say that the company could launch its initial public offering by the end of September. JSW Infra's IPO will mark the JSW Group's first listing in 13 years. Yash Jain is here with more.
Well, after JSW Steel and JSW Energy, the third company from the JSW Group preparing itself to come with its IPO and list on exchanges. And it's almost after 13 years that a company from the JSW Group is coming into the IPO market. What we've been given to understand is that JSW Infrastructure, the IPO for the company, is expected to open by September end this year. JSW Infrastructure is the company which essentially houses the ports business of the company. As far as the IPO itself is concerned, the company would look to raise about 2,900 crore rupees through a complete fresh issue, which means that 2,900 crore rupees raised would come into JSW Infrastructure. And as far as the proceeds are concerned, what sources tell us is that about 900 crore rupees is expected to be used by JSW Infra towards debt repayment. About another 900 crore rupees expected to be used towards bringing up an LPG terminal at its Jaigarh port. 250 crore is what the company intends to use towards the container terminal, JSW's container terminal at NMPT. And finally, about 850 crore rupees expected to be used towards other expansion purposes for JSW Infrastructure. But of course, important timeline here by September end is when the IPO is expected to open. Adani Ports is one listed company in the sector, and this would be another one in the listed space coming from the JSW Group.
Okay, all right, Yash, thanks very much for that. Fintech SaaS company Zaggle Prepaid Ocean Services 563 crore IPO opened today. The executive chairman said that they charge enterprises to use their software. He added that they will be able to maintain margins at 16% FY22 levels. Listen in.
What I would say is that what we have done previous year, we will be easily able to maintain and, increase them. Assured income is, roughly about 15 to 18% of the interchange. Interchange last year was 170 crores, and we had like 25 crores of, SaaS fee. Roughly, we typically add about 6 to, 8 lakh users.
Moving on, in more IPO rush, the third largest hotel owner, Sami Hotels, has launched an IPO worth 1,370 crores. We did speak to the management. Ashish Jakanwala, Managing Director and CEO of the company, said that they would like to expand their portfolio and reduce debt of the company as well.
We feel there is a huge pool of hotel assets in India which are undermanaged and underperforming. So we've been able to identify such hotels, acquire them. Typically, post-acquisition, we will change the product, bring a strong brand partnership. And by doing so, we've been able to see a significant improvement in the performance of those hotels, right? We'll start adding some inventory starting September next year. And then through the course of next year, FY25, FY26, we are ready to add about 600 rooms to our portfolio to take it to about 5,400 rooms. And that's all of that portfolio is within the company right now, so we don't need to make any acquisition. Significant amount of capital expenditure has already been incurred on those assets. And in addition to that, we are also planning to actually renovate and rebrand about 900 of our existing 4,800 rooms. Right, our current net debt is about 2,850 crores. We are doing a primary issuance of 1,200 crores, and almost all of it is going towards reducing our debt. So we'll probably, net of expenses, we should have about 1,100 crores available to us. And therefore, the net debt post-IPO should be more in the zip code of about 1,750 crores. So that's really the starting point.
All right, moving on, the fifth headline and some news from the aviation space. There's an important development at India's largest domestic carrier, Indigo. The stock was under pressure in yesterday's trade, and DGCA sources have confirmed to CNBC-TV18 that the airline has been allowed to take 11 Airbus A320 planes on wet lease. Sources also tell us the airline is likely to take some 11 more planes on dry lease. Madhya joins in with more details. Madhya, over to you.
Well, this is certainly a big news at Indigo that the airline is taking 11 A320 narrow-body planes on wet lease. Sources at the DGCA have confirmed to CNBC-TV18 that the airline has received the regulator's approval for the wet lease. And separately, we also learn that Indigo might take another 11 A320 planes on dry lease. Now, just to quickly explain to our viewers, wet lease is where the planes come with crew and maintenance. And under the dry lease arrangement, the airline just gets the aircraft and deploys its own crew. The leasing of planes indicates that the airline is trying to augment its capacity to adjust any more grounding of planes due to the Pratt & Whitney engine inspection issue. Now, Indigo already had some 40 planes grounded before Pratt & Whitney announced it is recalling 1,200 engines globally. But despite that, Indigo's market share has grown from 54% in January to 63% in August and 64% in July. Apart from the leasing as one option to expand capacity, Indigo also has a huge order of around 1,000 aircraft expected to be delivered in the next few years. Moreover, the airline's financials look quite strong. Indigo had posted a profit of 3,000 crores in the first quarter of this fiscal and had free cash worth over 15,000 crores. While we still don't have any clarity on how many of Indigo's engines Pratt & Whitney will take for inspection, experts say even if Indigo faces a situation where many engines are to be removed, the airline is in a position to provision for that shortfall, ensuring it has enough capacity to continue flying without any disruptions.
Okay, all right, Madhya. Thanks very much for that. Well, let's move on. NMDC and Jindal Steel and Power surged over 5% and nearly 3% respectively. Brokerages have put a positive note on these companies. Vivek Iyer is here with the details.
Well, the metal pack was in focus and metal stocks were among the top performers in today's trading session. NMDC, in fact, informed that it had gone ahead and raised both lump as well as iron ore fines prices by close to 300 rupees per ton. Now, along with that, when you're talking about what Antique had to say on NMDC, they're quite positive. They're saying that this indicates that the falling prices has now ended and, in fact, there is potential for further price hikes going forward. Number one, post a good monsoon as well as demand increasing significantly. They're saying higher international prices as well as strong domestic steel production is expected to continue to aid NMDC's performance. In fact, yesterday, ICICI Securities upgraded the stock to a buy stance from an ad that they had earlier. They raised the target price significantly to 180 rupees a share from 130 rupees a share. They raised the EV/EBITDA multiple and also their expectations for EBITDA by close to 22%. EV/EBITDA multiple now stands for them at 5.5 times versus 5 times earlier. What they're saying is that the sales volume in FY24 may breach their earlier estimates. Long-term visibility is much clearer. They also believe the input cost will reduce as well. Now, talking about JSPL, one of the top gainers as well today, Antique once again has come out with a note. They have a buy rating on the stock. They have a target price of 804 rupees. What they say is that they like the volume growth prospects, the cost reduction, margin accretive projects, as well as prudent financial acumen that the company has displayed over the years. Along with that, they're saying the captive coal mining and lower iron ore costs can drive cost reduction in the second half of FY24. The company is also planning capex outlay of close to 24,000 crore by FY27, aiming to enhance their crude steel making capacity.
All right, thanks Vivek for that. Staying with the more brokerage outlook, hospital names like Narayana, Apollo, Rainbow Children's Medicare were in focus in today's trading session. A Kotak institutional note indicates that most hospitals are expected to report 8 to 10% EBITDA per occupied bed. So they have spoken specifically on a couple of these hospitals. They have indicated that they expect Rainbow to report the lowest EBITDA per occupied bed at a CAGR of 3% between FY23 to FY28. KIMS to report the highest at 10%, Max to report 9%, others like Apollo, Narayana, Aster anywhere between 8 to 9%. They've downgraded Aster, DM and KIMS given the recent run-up in their prices. So they've downgraded Aster to add versus buy, downgraded KIMS to reduce versus buy, and they have a reduced call on Rainbow as well as Narayana, a buy on Apollo as well as an add on Medanta. Well, with that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates on CNBC-TV18.